In this video, we'll be doing a deep dive analysis of Texas Instruments stock, ticker symbol TXN, in an effort to determine if it is a good stock to own in our investment portfolios. We'll be looking at a variety of things, including the fundamentals of the business, their 2022 operating results, the balance sheet, dividend history, and some valuation metrics. We have a lot to cover in this video, so let's get right into it. First, let's talk about their business model. Texas Instruments designs, manufactures, and sells semiconductors to electronics designers and manufacturers. In their 10K annual report, they enumerate 4 different competitive advantages they believe they have, and these are a strong foundation of manufacturing and technology, a broad portfolio of analog and embedded processing products, the reach of market channels, and diversity and longevity of products, markets, and customer positions. And I think this last one here is pretty important, the longevity of products, markets, and customer positions, because basically what happens is if a customer decides to use their products, then they're probably going to build their software and firmware code base around those products. And then in the future, when that customer is, wanting to make an upgrade or something like that, they're most likely going to choose yet another Texas Instrument product because they already have that existing code base there. And so a lot of that firmware will be pretty similar, and they'll be able to, make that transfer without having to pretty much start over. So it makes once a customer is, using Texas Instruments products, then it kind of gets them into the groove there and makes it a lot more convenient in a lot of cases if they just stay with Texas Instruments for a long time. So in terms of actual products, TI splits their business into analog and embedded processing products. The analog segment generates about 77% of revenues, and the embedded processing segment generates about 16% of revenues. They also have a catch-all other segment that generates about 7% of revenues, and some of the products in here include DLP products and their famous calculators. In terms of their customers, the vast majority of TI's business is in the industrial, automotive, and personal electronics markets. And looking at the list of sectors within the industrial and automotive markets, I personally see a lot of sectors that I expect to grow rather quickly over the next 10 to 20 years, which really puts Texas Instruments in a great position to grow along with those sectors. They do also have some business in the areas of communications equipment, enterprise systems, and calculators. And as I mentioned, Texas Instruments manufactures the vast majority of their semiconductor products. They have manufacturing sites throughout the world, specifically in all the cities and regions listed here. And they're also constructing 2 additional facilities right now, with the first expected to begin production in 2025. These are both in Texas, and on that area of ground, they have, room to build an additional 2 facilities after that, but they don't have any, current plans to do that or construction, but that could happen at some point even later in the future. But with these 2 new sites, TI expects their use of subcontractors and external foundries to further decrease, so that'll just increase the amount of internal manufacturing that they're doing. And I think personally that their internal manufacturing is a huge advantage, especially since about 60% of that capacity is located in the US, and TI fully owns about 90% of their manufacturing facilities. Given some of the supply chain issues that we've seen over the past few years, specifically with semiconductors, I think customers are likely to prefer a domestic supplier when they have the choice. Now that we have an understanding of how TI operates, let's take a look at their results for 2022. Although revenues for the fourth quarter did decline about 3% from the fourth quarter of 2021, full year revenues grew about 9% year over year to $20 billion in total. And moving down to the bottom line, net income grew by about 12.6% over 2021 to a total of $8.7 billion. But when we factor in share repurchases and looking at earnings per share actually increased about 13.9% year over year to $9.41 per share. Although 2022 was overall a positive year, demand did start to slip in the latter half of the year, and and that trend is certainly expected to continue. TI is expecting revenues of between $4.17 and $4.53 billion in the first quarter of 2023, which would be a decrease of about 11.4% compared to the first quarter of 2022. And additionally, for the full year of 2023, I found some analyst estimates, and analysts are expecting revenues of around $18.15 billion, which would be a decrease of 9.4% compared to 2022. So 2023 is definitely going to be a tough year for TI and honestly the whole semiconductor industry, but the market is, eventually going to recover in the semiconductor space, and TI will likely have another stretch of great years in the future. As we can see from this chart of revenue since 2010, the semiconductor market is generally just cyclical in its nature, but over time, Texas Instruments has, steadily grown their business despite the shorter term fluctuations. So the cyclical nature of the business doesn't necessarily make it a bad business, but it's certainly something that you need to be prepared for and understanding of as someone that is interested in investing in TI, because 2023 is definitely going to be a little bit of a lackluster year for the company compared to previous years, but ultimately that will likely come back and the market will likely recover in the future. Now let's try to get an understanding of TI's financial health by examining the balance sheet. We can first see that cash here is down a bit year over year while short-term investments are up, and these items together are usually considered to be very liquid, and their sum hasn't really changed much in the past year, so that's really not that big of a deal to see. We also can see an increase in inventories, which does correspond to the slowdown in demand that we talked about before in the overall semiconductor market. But overall, total current assets are up just a little bit to $14 billion as of the end of 2022. And the great part here is that current assets are far greater than the current liabilities, which are just $3 billion. And the current assets are actually even greater than total liabilities of $12.6 billion, which is really awesome to see. And when we look at debt, we see they have $500 million of long-term debt that is due within the next year. And then they also have $8.2 billion of long-term debt that is due at later dates, and that adds up to a total of $8.7 billion of long-term debt. And generally, we like to see this less than 2 times their net income. And their net income last year was $8.7 billion. So that means their net income from 1 year could actually cover their debt, which is really awesome to see. And it's also important to note that their net debt is really essentially zero. When we combine the cash and short-term investments, we get $9.1 billion of, super liquid assets right there. And that actually exceeds the $8.7 billion of long-term debt. So realistically, they could pay off all their debt tomorrow if they wanted to, which is a great position for a company to be in. I think it's pretty safe to say overall that Texas Instruments has an incredibly strong balance sheet, and I really have no concerns about the financial health of the company. Moving on to some dividend metrics, we can see here that TI currently has a dividend yield of 2.8% with a super healthy payout ratio of 48%, meaning they have lots of excess earnings to cover the dividend, and they also have lots of room to grow that dividend. And grow that dividend they have. Texas Instruments has grown the dividend at an average rate of 16.4% over the last 5 years, and they have an uninterrupted dividend growth streak of 19 consecutive years. Seeking Alpha is a bit wrong in this case. This 16.4% dividend growth rate does seem pretty aggressive, and it makes sense to question whether that's sustainable over the long term. And we can look at the rate of growth of earnings to figure this out. And over the past 12 years, earnings per share have grown on average at about 14.6%. So they're not growing quite as quickly as the dividend, but they're still growing pretty quickly. And I think, Texas Instruments will be able to sustain, double-digit dividend increases for a long time to come. Starting to look at some valuation metrics now, we can see that the current PE ratio for Texas Instruments is 18.7, which is a bit higher than their long-term average of around 17.5. But I think it's important to note that if the stock price does stay the same, the PE ratio is most likely going to go up over the next year since earnings are expected to decline some. And comparing Texas Instruments to their peers, the technology sector currently has an average PE of 24.4, while the semiconductor industry has an average of 18.7. So generally speaking, TI looks to be in line with both their, historic valuation and with their peers. But like I said, earnings will certainly fall over the next year, and by how much, I'm really not sure, but that's an important thing to keep in mind when thinking about valuation. And now for the discounted cash flow model, which is just another method of valuing a company. I calculated a fair value for Texas Instruments stock of $148.85. And when we apply a 10% margin of safety, that gets us to a buy price of $133.97. And when we compare this to the current price of TXN stock, which is around $174, they definitely look to be overvalued right now. Another thing I do want to touch on is TI's share repurchases. Since 2010, shares outstanding have decreased from 1.269 billion to 916 million, which is about a 28% decrease. And this means that an ownership stake of 1% in 2010 would now be worth 1.35% of the company without any further purchases of stock on the investor's part. Although share repurchases generally do help shareholders by increasing your ownership stake in the company, there is a caveat here, and that is that they're really only good for shareholders if they are done at a price below the intrinsic value of the business. So for Texas Instruments, we can see here that their average repurchase price in Q4 of 2022 was $158 per share, which is a little bit above the $148 that I calculated for the fair value, but not all that far above. And it is also good to see that they repurchased a lot more shares in October when the price was lower than they did in November and December. So I do think their repurchases have been at slightly higher prices than I like, but not anything too crazy. And in the past, 2 years, there's really only been a few brief opportunities where the price has been attractive, in my opinion. Texas Instruments is a fantastic company with a strong record of earnings growth in the past, and they are well positioned to take advantage of future advances in technology over long periods of time into the future. Their balance sheet is one of the strongest I've seen, and they have an excellent record of dividend growth. The main thing for me that is a bit unattractive about TI right now is the valuation. The $174 price is just a bit too high for me, but I think around $150 would be quite attractive. First of all, this is pretty close to the fair value of $148 that I calculated from the DCF. And second of all, that would equate to a PE ratio of about 16, which I think is pretty attractive as well. If you have been watching some of my recent videos, then you might know that I want to make some sort of changes to my dividend portfolio over the next year. And I think that Texas Instruments stock would be a great one to add to the portfolio. And I think there's actually a pretty good chance that I will add it, but only if it gets to a more attractive price. So let me know in the comments down below what you think the fair value is for TXN stock. And if you do have any additional thoughts to share, make sure to join the Discord. The link will be in the description, and there we can chat about really anything, but there's other investors in there that like to chat on a daily basis just about stocks and dividend investing mostly. If you are new here, make sure to subscribe to the channel if you don't want to miss out on future videos about dividend investing. Thanks for watching, and I'll see you all in the next one.